Hey all, welcome back to another episode of Market Monday with Stackers Recon. I'm Ryan Larkin, and we're here to talk about stacking precious metals as a hedge against inflation in the financial system. There's a lot of bullish sentiment going on in the market this week, particularly in the precious metals. Seemed like everywhere I looked, there was another YouTube video about where the precious metals are going and what's going on and how high it's going to get. And while I think there's a lot of reason for metals to continue higher, it also makes me think that we might be getting ready to take a little bit of a breather here before we go any higher. Just because of how bullish everyone is, it usually makes me want to go the other direction, which in most cases is correct, but metals still have a lot of reasons that they could continue higher. So let's get into it for what happened this week. Gold closed at $43.28.30. That's up $85.30 from a week ago. If you remember, the week before that, gold had actually traded a little bit lower for the week, but this week we closed $85 higher. That's a pretty good move on the gold. We're right up there against the 52-week highs at 44.33. Now the point to close above for us to continue higher in this gold market is still 43.79. We have yet to close above that, but we are trading very close to it. And that 43.79 is just a chart technical point that if we close above would signal that we can start trading up to that 4,800 area here over the next couple weeks. Now, I've heard a lot of guys say, oh, gold's going to 10,000, gold's going to 15,000. And while I agree with that, the question is when. And those goals of 10,000, 15,000 are so far out there. I mean, we're talking about doubling, tripling the price of gold. Let's talk about some short-term targets and where we can go from there, because that's ultimately going to help us with our goal, which is to continue stacking precious metals. So that's why I'm talking about these short-term goals rather than these long-term ones. These are going to help us here in the short term keep doing what we're doing. Also, we're not here to predict the future. We're here to learn, watch what's going on, and keep on protecting our personal wealth and everything we've earned. Silver for the week closed at $62. That is a new all-time high for the silver market that had a weekly high of 65.08, which happened on Friday, but it closed just $3 below that high there. Something interesting that's been going on in the silver market that a lot of people have been talking about is that one of the biggest shorts, which was one of the biggest banks, JP Morgan, is no longer short the futures, the silver futures. They are now long 750 million ounces of physical silver. The rumor is that they'd been selling this market short and keeping it depressed so that they could keep buying precious metals down here at lows, and now that they've got their position fulfilled, they've unwound all those short positions and are now riding the wave higher. Another interesting fact is that it's estimated that there's 2.44 electronic contracts on the COMEX for every 1 ounce of physical silver that's on the COMEX, which means that if everyone tried to stand for delivery today, we would be short over twice the amount of silver that's currently there. And the US Mint is running low on silver, so silver eagles are probably going to start showing up as a shortage as far as that supply goes. And the mines just can't keep up right now. So there's a lot of reasons that silver can keep making some big strides here, particularly over gold. Not that gold's not going to continue higher, but silver is definitely going to be the mover because of the market demand and the shortage of the supply right now. The gold silver ratio this week closed at 69.38. That's narrower 2.5 points from the 71.93 it traded at a week ago. So over the last 2 weeks, that gold silver ratio has continued to narrow time and time again. And I'm really interested to see if it really does continue to get narrower. We're kind of right here where there's some support at the 60 area. But if we continue, we'll definitely get into that 30 area, which would put silver around $96. There's some people with some very wide goals on the silver too, $200 silver, $600 silver. There's targets in the 4 digits. But like I said, we're not here to predict the future. We're just here to kind of see where the next targets are so we can figure out how to keep on buying. I bought some silver here personally in the last week around the $60 area, but I'm not buying any gold at the moment. So if you're looking to stack, that's where I'd be continuing to stack with these current market conditions right now. Copper has been holding strong, but not really making any big moves. It was down 10 cents from a week ago at 536. The 52-week high is still 604 on that. And I got a question last week about should we be stacking copper? You'll see on a lot of these websites that you can buy copper bullion. I've never been a fan of stacking copper in that way. I think what gives copper its value is its utility. And that, of course, is ammunition and wire. Now, is wire tradable in some sort of apocalyptic system? I don't know. But ammo definitely is. And so that's why I like to look at copper and see what's going on with it and how it relates back to the prices of ammo. Copper, of course, is very valuable, and there's a lot of reasons as to why it could go higher and to new highs that it's never been to before. So I like to keep an eye on that. But as far as stacking copper bullion, I don't really see a use for it. It might be tradable, but at the end of the day, it's still just an ingot of copper, and what are you going to do with it? Not much. Silver and gold is money, and gold more so. It is money. So that will always have value in a bullion or a coin shape as opposed to copper. Lead for the week closed at $1968.32, down $38 from a week ago. So lead just keeps continuing to move lower over the last several weeks. The 52-week low is 1900, so we're getting very close to that 52-week low. Something interesting on the lead is that we're at about the same price levels as we were during COVID when the last ammo shortage hit. So just kind of something that I put together on some data there. We're not really seeing anything significant going on in the ammo market, but we are at the same price levels that we were during COVID when there was an ammo shortage. Crude oil for the week closed at $57.44, down $2.64 from a week ago. The 52-week range on that is $54.72 with the high of $71.38. We could see a high. The top range of that area is $61.29. If we hit that, I wouldn't see it going much higher than that $61 area. But $53.87 is still within reach here over the next few weeks, and that is still the 62% retracement from the 2022 highs in the crude oil. I anticipate to see some support there, and crude oil just keep chopping sideways. The reason I like to talk about crude oil is because crude oil is not only in some cases a reflection of the economy, but it is a direct reflection of fuel prices, and that of course affects us in all sorts of different ways. So I like to keep an eye on that and just stay informed with what's going on in the crude oil market. Bonds this week closed at 114.21 or 4.85% yield, which is up 0.18% from a week ago. So the last 2 weeks, we've seen the bond prices move lower and the yields move higher. It's that inverse relationship we talk about time and time again. We're not seeing big influxes in the yield going up, but the yield is going up, and this week the Fed talked about reducing rates again. So that's a little interesting fact here for the week. Bitcoin closed at $90,440, up $840 from a week ago. The 52-week range on the Bitcoin futures is 78,615 and 128,585. Lots of sideways action in the Bitcoin market this week. We only had a change of less than $1,000. So we're not seeing a lot of moving in the Bitcoin market right now, but it is well off the highs, that is for sure. The ammo market for the week No changes in pricing. 9mm 124 grain ammo closed at 25 cents. That's steady with a week ago, with a range of 20 to 35 cents. This is of course what I call high quality ball ammo, and not your typical Sammy sporting ammo, range ammo that's going to be 19-18 cents around. 5.56 62 grain closed at 46 cents, steady again with a week ago. That 5.56 has been steady for the last 2 weeks. Now I've been watching that copper. Copper of course is towards its highs, and what does happen if copper breaks out? I think ammo is eventually going to have to give. You know, your brass is 70% copper, and of course you got the copper jacket on the projectile itself, which isn't that much, but there's still a lot of copper that goes into these ammo rounds, so that'll be something to keep our eyes out here for the next few weeks. If you have any other calibers of ammo that you would like for us to start tracking the market on, let us know in the comments or by email, and we'll look into starting to track that caliber of ammo. I always start with the 9mm 5.56. There might be some other ones that may be more pertinent to start following, like maybe 50 calibers one we should add. That's all I got for this week. Keep on stacking. We'll see you soon.